Frontier opening bell for Tuesday, the 28th of February, looks a little bit like this. If you take it off from the market side and you saw that very deep dive, 3.15% yesterday on the Nigerian stock market, just to start the week, roughly 2 trillion naira was wiped off the total market value, and that was led by big names in cement, such as Dangote Cement. You've got folks in the banking sector such as Zenith Bank, then a few other non-banking names like Etana Oil as well, and of course the shares of NGX Group itself that's listed on the Nigerian exchange or in a negative territory. So all that in the news as we start the new market week. The Ghana stock market was a little bit positive. The BRVN was down by 0.38%. The shares of Bank of Africa, Mali, as well as Orange Telecom of Burkina Faso declined. That dragged a few others. Put together, dragged the composite index of the regional exchange in Côte d'Ivoire. The EGX continued much stronger for its own second day of trading, starting Sunday. Monday, the rest of the market reopened. After the weekend, 1.12% for the EGX 30 to the upside, a very strong Monday. Then the Nairobi stock market was better by 0.87%. We saw the shares of Kenya Power very strongly traded to the upside, about 2.38 million ordinary units. That stock closed roughly 20% on the day, 18.8% to be precise. Then you've got the GSE yesterday pulled down by resources and industrial indices on the market. Financials managed a few points, just about 30 basis points in the green territory. And that summarizes the Zimbabwe stock market was also tepid to start the week, less than a 0.25%. So just put that there and rest it and get to follow some of the biggest stories. The new 16% VAT is kicking in South Africa, in Kenya, and of course, it's what everyone's talking about. In the meantime, Tanzania says it's relaxing rules for bureau de change operators as the country continues to grapple with inadequate supply of foreign currencies. Ethiopia is looking at crypto mining, and that's the news. As part of opening up the country's new financial services industry, because they have a deal with the Hong Kong data center. That's how that goes. In the meantime, next door, Kenya is putting its foot down with regulations for Bitcoin because Kenya wants to avoid grey listing. And in hospitality and tourism sector, we've got Marriott International, which is one of the biggest hotel chain in the world, as well as Morogoro Mishama company looking to open Le Méridien hotel on the island of Zanzibar. That's what should happen next year. All hands on deck for that. Congratulations, folks. As you see, Zanzibar open up a whole lot more as a hub for tourism, leisure, and hospitality on the African continent, in particular the East African region. Then you have Uganda's digital card payments, says it's now roughly 300 or 530 billion shillings. That was as at the end of fourth quarter last year. What else is making a splash today as we get on to the rest of the week? Tuesday, within West Africa, Nigeria's unemployment figure came in slightly higher, 0.8% to 5% for the third quarter of last year, that was. But the bigger news was the cement makers, Dangote Cement, Boa Cement, and a few others, Lafarge, and a few other marginal players in the fields had a meeting with the Minister of Industry, Trade and Investment on Monday. Quite a very lengthy meeting. The agreement was that cement prices would have to go down to about 7,000 to 8,000 for 50 kg bag of cement. Nigerians are groaning on the new cement price, which was moved strongly upward to 15,000 per 50 kg bag. Now they've agreed. And of course, the cement maker says the government has promised a few palliatives. They're waiting for the government to fulfill all those ones. And cement prices could go back to around 7,000. The excellent price for quite some time was about 5,000. Then all of that became an issue within the Nigeria space. The economy is really under strong pressure right now. And that's where the IMF latest reports coming through on Nigeria that the country could see inflation peak at 44% this year because the naira value continue to worsen. The Czech Republic has missed yet another debt repayment, about $20 million. Cumulatively, it's about $500 million that the Czech Republic has fulfilled to deliver in terms of debt payments because of the sanctions on the country by ECOWAS sub-region. The IMF, however, says it's reached a deal with Cote d'Ivoire for about $1.3 billion deal for resilience and sustainability projects within the big French-speaking West African country. Mauritania, if you take that to the Western Sahara area, you got Mauritania has about roughly $18 million deal with the International Fund for Agriculture Development within that axis. That will bring it into you. Let's get on to Southern Africa as we look at some of the big news from there. Malawi's, their AFDB is projecting the country's GDP will be 3.5%. For 2024, Malawi's general inflation, however, went up to 33 or 35% because there's a pressure on the economy and currency and all of that. Seriously highly elevated. The ShopRite's gotten some money from about 1.2 billion rand from Standard Chartered to support the retailer supply chain network within South Africa. Telkom South Africa is also reporting its third quarter profit, however, says it was flat. Revenue ticks up, however, because of value propositions. And finally, the AEC, which is the African Energy Chamber, that's a strong advocacy group in the energy sector, headquartered in Johannesburg, says they've got a deal, a trade mission to Namibia, and that will happen between April 23rd and the 25th. Keep an eye on that for everyone in the energy and investment space on the continent. So let's sum it up in North Africa, with some of the big news starting the way. AFDB is expecting Egypt's real GDP to be around 3.7% for this year. Libya's GDP is forecast to be at about 7.9%. That's much stronger than quite a number of the other big names on the continent: Nigeria, South Africa, Kenya, and a few others. Then the Egypt Central Bank says about $100 million has been approved for basic commodities as inflation, depreciation in the value of the pound continue to raise the cost of imports of imported food inflation into Egypt. Now, government is putting $100 million aside to support commodity prices. Then you have UK and Morocco looking to expand their bilateral ties via infrastructure cooperation between the two countries. Keep those headlines in mind as we get yet another day started on Frontier Africa. This is your Frontier Africa opening bell this Tuesday, the 28th day of the month. Have a great day. Watch this show again, as well as all other shows on our YouTube. Subscribe is free. And of course, all our social media handles, the LinkedIn, the Instagram, the Facebook, and others, and X are all there for you. Follow us, and we'd like to get your feedback. Bye for now.